Legal bookkeeping, an exercise on journals. The cash book and the petty cash book records receipts as debits and payments as credits. These entries form one part of the transaction, which is used when completing the double entry. A journal entry, on the other hand, is mostly required for entries or transactions where there is no flow of cash. As with all accounting entries, the journal entry has a debit entry with a value as well as a corresponding credit entry with a value. Let's look at the following examples to better illustrate the above principles. Transaction 1. A computer was purchased on credit by the practice for 9,000 Rand from FATA Limited. It is to be repaid in installments of 450 Rand per month. First, let's categorize the two parts of the transaction. The computer is an asset, and FATA Limited is a creditor or liability. Next, let's assign the two parts of the transaction a debit or a credit. Debit the asset and credit the creditor or liability. The description to use in the journal is purchase of computer equipment on credit. Remember, the monthly repayments of 450 Rand will be processed in the cash book. Each monthly repayment will reduce the bank account balance and at the same time will reduce the liability. Debit the liability, which is FATA Limited, for 450 Rand. Credit the business cash book also for 450 Rand. Transaction 2. A consultation fee of 1,000 Rand is raised for the divorce matter of Mr. Smith. Fees are raised in the fee journal for the amount of 1,000 Rand. This entry is posted on the debit side of Mr. Smith's business ledger account. He then becomes your debtor. The corresponding entry is posted on the credit side in the fees ledger for the amount of 1,000 Rand. The description to use in the fees journal is consultation fee raised.